Let's do this. Well, since we're going to do this second time, we're going to run this quickly because the first time I forgot to hit record. So here we go. Identify key levels of liquidity and trade them. So we're going to go through this a little bit quicker. And obviously, since it's recorded, I'll post it. You guys can go through it. Smart money. What is it? Hedge funds, institutional investors, central banks, any of the big boys that have a lot of money. Not us. Not the pro traders, not even Chris. We're talking millions and billions of shares being traded at a time and dollar amounts. These are your Warren Buffetts, your Kathy Woods, and the likes. Since they have that much money, they control the buying and selling activities and move price. You and I could not, even if we collectively put in all the same order, it wouldn't move. So we don't matter. All we're trying to do is find out what they're doing, meaning buying and selling, and go along for the ride since they move price. That is, in essence, smart money. Now it comes into what is liquidity, right? You hear the term a lot. What is it? It's when smart money wants to buy or sell. It could be an equity, stock, ETF, currency, if you do Forex, crypto. Every buyer needs a seller. Every seller needs a buyer. It's the way the market works. That's why it's called a market. You go to buy something, someone has to have that item available to sell to you, and vice versa. So if there's not enough items to sell, then guess what? The demand outweighs the selling, correct? You have too many buyers and sellers, and you have the opposite. So that's what you have in these liquidity areas. These guys have areas where they're sitting there like, I need to buy a bunch of shares, but there's not enough shares. What do? They drive the price down. They force you to sell, trigger your stop losses, and they make those shares available now. When those shares get available at a certain price point, or when they have enough of what they need for the orders they're trying to fill for their clients, for example, that's when they'll buy and you'll see price reverse back up. That's all liquidity is. Basically, where everybody's putting their stop losses, where you see the most, that's where it's at. Smart money often triggers stop losses, as I said, to enter the market. This allows them the necessary buy or sell orders for their positions. And we'll show it on the chart so you'll understand it a little bit clearer. And of course, I see CP laughing at me in the chat. I will deal with him later. Liquidity will always attract price. Always. Because that's where the market makers want price to go. That's where the big boys want price to move. So where those orders are sitting, that's where it's going to go. Liquidity will either be absorbed and continue with the trend, okay, or price can reverse and then come back into the range. Usually when it's choppy market, breaking out of a pattern, you'll see it when it tests the 5-minute opening range break. You'll see it on when it's testing pre-market high, pre-market low, previous day high, previous day lows. Sometimes it'll just touch that area and bounce right back the opposite direction. Other times it'll break through, retest it, and keep going in the same direction. And we'll get to some examples to show you that. A lot of times when it reverses, that's a trap. So if it's going to come near a previous day low, it'll just go just below it, and everyone thinks it's going to keep going. All of a sudden, it rips the other way. That's basically a stop hunt, or what we like to call a liquidity sweep. You have three main types of liquidity. Okay. You have support and resistance liquidity. You have trendline liquidity. You have fake out liquidity or liquidity grabs or liquidity sweeps. Support and resistance liquidity. This type of liquidity is when price is chopping or consolidating, where we had that today. SPY and QQQ did that in the second half of the day today. And I'll show you a trade actually I took off of that and how you could have played it if you were sniping, particularly in futures. Hard to do on options. Um, those areas, you often get equal highs and equal lows. That's where a lot of people will say, oh, that's a triple top, triple bottom. But sometimes if you look closely, you'll see that same triple top, you'll see a triple bottom too. Someone else will say, no, I see a triple bottom. Well, that's an area of consolidation, and you have liquidity sitting on both sides. Now, these are areas where you wait for a solid breakout when it breaks out of these consolidation areas, but it's a little bit risky because of the liquidity sweep, and I'll show you that. Where a lot of times people say, oh, that's a change of character, and they try to jump in the trade, and all of a sudden it rips the other way. That's why I say they're a bit risky. The safer option, which you guys seen through the previous Zoom calls and what have you, is you do a break and retest. You'll find out that seems to work more often. Do you get them every time? No, you don't. Because like anything, it's not 100%. But it's a safer option. Trendline liquidity. Basically, it just helps you see price action, see a pattern, see which way price is kind of going, and when it breaks out, you will see a change in direction. You see it, I see it, a million other people will probably see the same thing. Remember, we're all looking at the same candlestick chart, really. So if I see an ascending triangle, there's probably a gazillion other people seeing the same thing. So it's not that those trend lines are support and resistance, but since a million people are probably looking at it or more, we have a herd mentality. Everyone's waiting for it to break out of that cup and handle formation, that triangle, that falling wedge, that rising wedge, to see that immediate shift in price. So inherently, there is some form of liquidity there. Trend lines created, to form channels of price action, particularly ETFs, a lot of times are algos. You'll see it on SPY, QQQ. They'll run very similarly most of the time. You'll see it in IWM. You'll see it on some smaller other ETFs, but those are the main ones I've seen it the most. That's what you call algorithmic trading, buying and selling, without getting into the math and the complications of it. But basically, they're driving price in the up a channel, maybe to drop it later if it tapers. You'll see me post charts in there sometimes like that. Or the opposite way, where I say, hey, it's grinding down in a very controlled manner. That means a lot of times it's building liquidity up. And when it breaks out that channel, that's the move I'm looking to trade as a scalper. The trend lines help you visualize. Basically, a change in the trend. That's all it is. Your fake out liquidity, liquidity grabs. These are the most common with new traders. I see it in the Discord all the time. I had a put here and a call here. It dipped on me. I got stopped out and it ripped on me. If I didn't get stopped out, I would have made 200% on the trade. And then all of a sudden it happens to them a couple of times and they're like, that's why I don't use stop losses because I keep getting stopped out. Well, that's not a valid reason not to use a stop loss. You're just not placing your stop loss correctly, number one, or your entry may be off, so your risk to reward is really off. The problem is they don't understand the areas of higher probability of liquidity. So basically, people will say, here's a demand zone, here's a supply zone, right? It just got created in a lower time frame. But they don't understand that below that area or above it is a larger supply or demand zone. So basically, they're faking you out to rip it to go farther. So it kicks you out, goes to the higher time frame supply or demand zone, actually, not the time frame you're on, maybe on a lower one, and it goes with your original trading plan that you had thought. So a lot of times you'll get an order block. It has a fair value above it. You'll see it, sometimes it taps the fair value gap and goes. Sometimes it dips down a little bit and spikes out. Sometimes it fills it all the way and then taps the order block and goes. And that's where you have to watch price action. So it's not guaranteed just because a fair value gap is there, an order block is identified. So what happens is everyone they anticipate the break of these supply and demand zones or support and resistance. While price just goes right through it a lot of times, and then it goes in the original direction. I think a lot of people get this mixed up between a supply and demand zone and an area of support and resistance. Does anybody know what the difference is between those?
I really can you explain it?
Support and resistance. Support and resistance basically are areas or lines that you draw. I like to do areas, but you can do lines where price has either rejected from at least 2 to 3 times. Okay. That's normally textbook support and resistance. Supply and demand zones are created usually at pivot points. Price gets to a certain price level and it rockets up. That's a demand zone. That means some institutional buying, smart money occurred there. Is it really a support level yet? No, it hasn't been tested. So therefore, we technically by textbook, it's still a demand zone. And then the opposite for supply zone. Price gets to up a certain level. You know, what did Tesla come down from today? Like 420, I think, if I remember correctly. And it came down. So you could
Can
say,
you,
as of right now, it's what? A supply zone?
can you
Is it
show an
really?
example of that on a chart?
I'm sorry?
Can you show an example of supply and demand zone on a chart?
Yeah, we're going to get to the charts. Um, so that area is a supply zone. Is it really a resistance zone yet? No, because it hasn't been touched yet or tested again. So that's usually by textbook what they call from everything that I've kind of read the difference between those. So now that is your textbook book lesson portion. Let's get to the charts. Okay. So this is my favorite SPY because I trade ES. You can do it on anyone, but let's make this easier. We're going to take that off. Okay. This box, obviously, for those of you know, that's my 5 minute opening range breakout. All right. And I'm going to show you something how that gets to be important and how those levels repeat. So let's go to previous day. Here's the previous day one, right? So if you look at it, this is yesterday. 5 minute opening range break came up. So at this point, what does that tell you? There are sellers here, right? So sellers were here, but if you notice, that same area is back here. The previous day.
Our support level.
So now you can see it's being tested, right? If I keep going back, you'll see it further and further. Over here, it acted as support, didn't it? If I was to drop a line right about there, you'll see that line being used again and again, all the way
So,
throughout. And I'm
so,
just going back to previous days here.
so support is at the top, demand is at the bottom.
It can be, but supply. So the way to do it, textbook, would be like so. This is according to the book. Now, the way people draw it, that can vary. Some say use a wick only, some say use a candle only. That's a matter of preference. It's an art form. It's not an exact science, to be quite honest. Well, let's make it red so everyone knows this is the supply zone. Okay?
Okay.
That right there, as of right now in this chart, I'm going to say is a supply zone. It hasn't got tested yet. So I personally would not say that's really a resistance yet until it gets tested. Okay? So let's keep going right now. Do we come back in that area? Let's keep going, keep going. We're getting close. And we got close to that area and came down and we ended the day. So we didn't quite make it up there, but we got close. Now
So
let's
was
see.
it based on 2 days, or how far did you go back?
I just went back just to see for now, for an example.
Okay.
Normally I like to go, I use the daily a lot of times. So it looks
Okay.
like this level probably even went back further. Because I scalped, so I'm a lot of times won't be concerned what happened a week, 2 weeks ago.
Okay.
Now, if I'm swinging, I will. Previous week high and low, I will mark out. So we haven't got to that level in a while. So that was probably as close as I'm going to get. So I'm trying to keep it simple without getting into other order blocks and fair value gaps and all that good stuff. So let's say I want to drag this further here. Like I said, it's an art because we're going to say, hey, it pushed here and it dropped down. So you can see here, pre-market on that day. What day was this? Monday. And then you come back, and here we are today. So what is that telling you? There's liquidity. What type of liquidity? Selling pressure.
Okay.
Correct?
Yeah.
Now,
Supply is where the sellers, supply to sellers and demand to buyers.
correct. And you could do the opposite here. Let's say, because I'm not going to make this really complicated for now. I'm just trying to show you little examples. And then you guys get to do homework. So if I was going to do that, we're going to say, hey, you know what? That's a demand zone. I'm not going to bother going back further and looking. That was the low of the day, right? And that was the low day yesterday. What happens? Do we ever come? We stay above it. We stay above it. We stay above it. We never came close to it. But say tomorrow, price starts coming down. What are you going to do here?
Buy.
You would anticipate. It's not an automatic buy.
Wait to see what happens.
Exactly. You watch price action. So for me,
Okay.
this is an area of interest. I'm going to watch on the lower time frame. I mean, if you wanted to, we could do this on an hourly chart. Here. Now you can see it here. That's a demand area, right? You get a solid one here. You have another one here. So this one actually, if I go to an hourly chart, there, I can see that all the way through. This area here actually left a gap and kept going. So you can mark off this area if you wanted to have that whole wide area. Everyone has a preference. Some guys will say, you know what, it's right here. It's a matter of choice and how you trade and what works for you. Some guys will say here, that's it because that's a pivot. What happened here? Price came down. They'll mark this out and say, that's my supply. So I'm going to make that red. So this is what I'm talking about. And if you notice, I'm not picking the smaller candles in between, right? What areas am I picking?
The opposite candle before the
Institutional.
cross section.
Institutional bias.
So I'll show you guys this with. You're looking at swing points. Is all I'm looking at right here. High, low, higher, higher, low. If I want to do that one up there, that's another higher high. Not that much higher, but it is still. Because that goes back to market structure, right? There. See how it's marked off? And that's on an hourly. Now, I mean, you can start marking up all these different areas too. Like even here, you could say, this is a demand zone, got ran right through. Right? Oh, this is a good example of one and what happened on this day. I can show you closer on the lower time frame of how liquidity works. Right here, we boomed off and we gapped all the way through, right? You kept going, you kept going. Now we got selling. We sold all the way down, right? If you know my market structure, high, low, really a higher high, right? We were waiting for this pivot. After the fact, we know that's really an equal low in a sense, almost, right? Not a clear cut higher low, right? But do you notice what it did? If you look closely, what did it do?
Swept out everyone that went long.
Everybody that went long from this quote unquote demand zone.
Take out everybody.
And if I wanted to get real exact on here, it'll be pretty accurate if I mark it off and I go back and look. So let's see, that's Tuesdays. So that was Tuesday's low. So I'm gonna mark that off.
So each of those demand zones is where you could buy and then sell at the sell zones. Is that what all of this means?
No, that means I watch price action.
Okay,
There's no guarantee rule that that's gonna work.
right.
And I'll like here, I drew that line right. And what is this? Tuesdays. There's Tuesday's price action. It came all the way at the end of the day, but you see that was a low of day. That's why I gave you guys those areas in the previous Zoom calls. If you watch, that's previous low of day. What did it do? Went right underneath low of day. Because what? They're anticipating the breakout traders that are probably looking for this. Hey, if we break low of day, this is what they're looking for, right? For the next level. Maybe someone said, hey, you know what? SPY's going to go to 601. I'm making this up at this point, but just to show you. So what does it do? Come right in, and maybe you're that breakout trader. It's going to keep going lower. What did price do then? You slide it over, came in, stopped them out, went the opposite direction. And if you were swing trading it, you can see right now what happened, right? You'll have the opposite happen. This level right here. This is a classic one from this point. And this was, what was this one from? Usually I write them on my chart, but where did that one come from? Oh, the low of this day. Okay. So if you go back down to the lower time frame, you can see exactly how price is going to sweep and literally play with that area, that same zone. These are areas of liquidity. So on this particular chart, this is Wednesday's last week. Price opened here, came up. You're thinking it's going to go long. It rips it down. Quick move. And what does it immediately do? Go in the original direction. Why? We had a nice gap up with momentum on that day. Everyone wanted to go long, right? And what happens when you guys jump the gun preemptively? Oh, I want to go long right from open. And all of a sudden, by this time, an hour later, man, I'm down on my 0DT contracts. I'm down 100%. I'm down 50%. Yeah, because you got killed. Because it ranged on you here, right? And then on top of it, it basically got you in a liquidity sweep, forced you to take your stops and go out because you're going to see this red candle. And if you're going long, you're like, man, I'm not losing anymore. I'm going to cut it, right? Well, this is where our nice 1, 2, 3, 4, 5. This is where our lovely 5-minute opening range break comes in. Should have never took that trade. All I did was range here, broke down. Breakout traders probably try to go. They're all trying to go, oh, I'm going to go short. I see this big red candle starting to form. Maybe they got in here, right? Maybe their stops are here. I don't know. And they're saying, oh, you know what? We're going to go down to back to previous day. Went down, stopped them out, added to the buying pressure, right? And went the other direction on you.
Hmm.
And over here, the rest of the day, it just pretty much played with you. That was a really rangy day. But even on the rangy day, you can kind of see what's happening. Let's zoom in a little. If I was going to draw a trend line, let's just say here. Okay. And you have one here already from the 5 minute opening range break. You see what price is doing? It's literally just trapped in here, right? But this should start giving you a clue. Now you can do this on any time frame, by the way. I'm just showing it here just because I trade it all the time, so I see it, so it's easier for me to come up with an example. Right here, you see the big spike up, wick down. That's telling me there's a bunch of guys sitting here selling this. I see that. I see that. I see a little bit more pop. Right here, they're trying to entice you to go long. Right? Goes up just a tad bit higher than the previous candle if you zoom in. What does it do? Come back down. Comes back near this area. Remember I said earlier? Just because you draw a line doesn't mean it's going to go there. This is what you like to call an inducement. What does that mean? It didn't come down to where you thought it was going to bounce from. They bounced it early. What are they trying to do? They're trying to get you to do this. Maybe, you saw that red candle and you're going to jump into the next one. I see a big booming candle, right? Look what they did to you. This is why this area is called an inducement. They're trying to get you to go long like, hey, here's some momentum. We're going to break out of this. Nope. Went right there, ripped it right back down, stopped you out. Another scalp killed. That's why the break and retest becomes so important. Here's another one. Comes up here. We're ranging. You're about lunchtime right here, about 12:20 Eastern time. Look what they do here. Give you a nice sweep to the top. That the wick is. That means a good volume came out. And you can see by my volume, that's higher. My volume's a little bit different from the normal red and green that you guys see. Mine goes off of standard deviation when, like a heat map for volume. When it's yellow, it's higher. When it's blue, it's cool. Red means high volume on mine.
Is it relative volume metrics?
I'm sorry?
Is it relative volume?
Yeah, it does a calculation for standard deviation, the way I have it set up.
It said it's coming tomorrow. It's in Hank Pip.
So, what you have here is the wick. Boom. It's going to entice you in for a lot of traders. Because, we're taught many times, and so have I. See a big booming candle, that means to jump. No, wait. If this is really going to go, it would have went here, probably would have cracked up.
It just said it's supposed to be expected tomorrow before 3.
Can you please mute yourself, whoever that is? Okay. So you have the same scenario here. This is why you have to be patient on days. Just don't take it off a candle. Same thing went down here. You see a little bit candles forming. You see the wick. They ripped it back up. That's what we like to say. Wait for the break and retest. Now here, look what they did. Broke out of the range. Now this one, honestly, I did take on a scalp. Why? Because all the liquidity here and here, I saw it sweep up higher above all these other wicks. Right here. Right? Tried it again, a little bit lower. Now, if you want to get into smart money concepts, there's probably an order block if I use the indicator, but you'll start to learn these, and I'll show you those later. Come on, where's my box thing not working? There. That area, you have a bunch of orders sitting all the way across. Right? This is how to... I don't draw them out because I just kind of see it enough where it's in my head, so that's why I don't draw them out. That, in essence, is what's happening right there. And then what's happening here, if you just want to think about it, You have an area here where everyone's thinking to go long, right? The top level, because we did that from 11 o'clock all the way down to what 1:15. So I'm a little over what 2 hours. We swept. We start coming down. Now here we finally broke. Question is, you don't chase here. Why did I take this short that day? See that wick right there on this candle? What type of candle is that?
A
Bubble
hammer.
hammer. Out of the small. Yep.
That's
Upside
a
down
hammer.
red hammer. Yep.
Some people call it inverted hammer. Some call it a gravestone. You know, you can call it what you want. Basically, buyers try to push this up. Seller said, "Nope, we ain't having it." But that's all that's telling me after this candle. So right now I'm biased. You go short. A little bit of risky play, but I took it anyway. But my stops were really tight. I think it was right above this, and I took it down because remember what I tell you in the PowerPoint earlier? Areas of liquidity are what like magnets. Price always wants to go. So if it's grabbing liquidity from up here and it's triggering what stop losses for the buy order sitting here, right? So if I have a buy order here, what happens when my stop loss gets triggered? It's a sell order, isn't it?
Yeah.
Right? If you have a buy and I have a say a stop down here and I have an order sitting here, I'm waiting to go long. I think SPY is gonna rocket all the way up to 607 or whatever. Okay? Today. I'm sitting here. They bring it down. This is what I mean by stop losses getting triggered. Down here, stop losses are triggered, right? For the long positions. That means sell orders. So it's going to add to the volume here for this move. And that's what I anticipated when I went short. That once it did this, it's going to start triggering stop losses and push down. And actually, I think I got out right about here. I just took it to the lower level of the opening range break. Could have stayed in it longer, but I was happy with my because I think on that trade it was what that was should have been like a 3 hour trade if I remember correctly. I think I got in roughly here. My stop was there, and I took it right to the bottom. Yep, look, 3.09. That was a 3 hour trade. That's all I wanted. Got out, done for the day. Now here, speaking of liquidity, you have all this liquidity down here, right? Let's see what happened earlier in the day. Your question about supply and demand zones. So over
Yeah.
here,
Hey, let me ask something, Face.
yeah,
So I'm a newbie. I'm used to support and resistance. Support is the bottom. Resistance is top. So the supply is the top and demand is the bottom.
correct.
Okay, supply the top, demand the bottom. Smart
Basically,
money is sitting on the top waiting
to sell it.
to sell it. Okay.
And this is the area they want to buy it. Just basically think of it as a basketball. This is a basketball.
Okay.
I threw it up, hit the ceiling, hit the rim. What's it going to do? It's going to come down. Okay. It hits
How
the
they go?
floor, which is your demand zone or
Uh-huh.
support. Ball's going to bounce. Simple way to look at it. Now, here, if you drew out this as a demand zone, right? Did you notice what price did right here? You had your demand zone, and it said, nope, we're not going to get you all the way down here. And it pulled it right back. Why is that? Anybody know?
Support buying in.
Nope. This is where I see a lot of guys draw their supply and demand, and they're like, "Well, price didn't exactly reach there. How come it didn't go?" Well, over here you could have your demand zone, right? This is where we get into another concept, which I mentioned right there. What is that?
Is that
Buy.
the
Fair
order
value
block?
gap.
That's a fair value gap. The wick of it's a three candle pattern. One, two, three candles. The wick of this one does not overlap with here. You have market inefficiency. This is why I people say, "Oh, it's going to go to a demand zone or it's going to go, support line." I don't trade them. That's why I say for me it's areas of interest. Because now when I see price come near that area, I'm looking left and saying, "Hey, there's a fair value gap there." Price will probably bounce out of there. And guess what it did? Rocketed right out of there. Didn't even get down to your demand zone. Or some will like, well, depending on if you use smart money concepts, you can say this is the order block. There's your fair value gap. So sometimes you don't always wait. That's why I said all these lines and rectangles I drew, that's fine. It's just for me to watch price action. There's no hard and fast rule.
So if we're not scalping by the minute like you are, do we
Mm-hmm.
just broaden the frame and use the same principles?
Yes, sir. Same thing will
Okay.
work on a higher time frame. There's no reason why you cannot do that. And I'll show you that in a second. Let's see. Let's go. I showed you that one. Uh,
Before you go to the higher time frames,
mhm.
can you, regarding scalping, what time frames do you use for scalping as far as like do you do 15-minute for direction, 3 minute for entry? Because I see you have various different time frames on your chart.
My chart. I always go. I always take a look from really high time frames all the way down to see what's going on. I will see weekly. Take a peek what the weekly candles are doing. Then I look at the dailies. Then a lot of times I'll drop down on SPY. I'll go down to 65.30 primarily and get an idea or maybe mark off those areas that interest me. And I'll always trade in the 1 minute. Occasionally I might flip to the 5 or 1 if I see you want to see something a little bit more clearly. But for me, at a minimum, I'm looking at daily. I like the 30. The reason I like the 30, it's a perfect number of candles for the market because you have 6.5 hours to trade. So every candle gives me a perfect equal time frame to look at. So that's why, if you notice, I don't, even though I have 1 hour here, that's when I do futures. But that's why for regular stocks ETF during a New York session, I use 65 minutes to even it out. And you see 195, where most people say that's a 4 hour because I even it out.
Oh,
Uh,
thank you so much for breaking that down.
yeah, let me show you. Okay. Let's find a good one. Where am I? I don't even know what day I'm on. 10th. Let's do. Sorry if you can hear my daughter. She's running around. um, here. This one was a decent day.
And you're fine. We can't hear her. At least I can't.
She's riding her little princess horse carriage thingamajig in the basement.
Family's more important than the damn stock anyway.
That is true. I'm trying to find a good one for you guys to see the trend line one at the algos. Here, you can see it here. It's There. This is what I mean when I see trendline channels for algos, and when I talk about liquidity being in there. This is a liquidity building. That's all this is, in essence. You see the break, and you see the large wicks coming down. So when I start seeing this, I'm already in here looking to go short at this point. So this goes back to when I was showing you guys earlier how you can use trendline and use those as a break. It'll work on QQQ, SPY, tend to have the same ones. And how I can show you, watch. I'm just going to clone this. I'm not going to change the angle or anything. And you'll start noticing it. I didn't draw it as good this time. Probably because I'm tired. But you'll get the idea. You'll get the same type of pattern running. All right? What did it do? Break to the downside. And it'll work the opposite way too. Very similar to when you guys see bear flags and bull flags all the time. There's another one right there. Let's make that one a different color. This is getting into algos and identifying them. But this is what I meant on the PowerPoint earlier. And you will see price respecting it. And the ETFs run these all the time. Right here, I see the drop down. But then I see this. How do I know that? It's very controlled. This one's probably even widened out a little bit. There. You can see how it's touching the wicks exactly. This is what I call tapering. And you can see what price action does when it breaks out. There's my break. Tried to bring it back down. Broke. Retest. Now looks like it's starting to go. But then here, you have what? You could say you have another level, right? But this is where reading candles comes in again. I can see from this side, price came down, right? So if really want to start making my chart complicated, I can say, okay, I have selling here. Read price action. Came up, induced you in, took it back down, came back to this level. And the funny thing is, I want you guys to notice this. You see how it's red? Why? It was a supply zone earlier, right? To my left when I drew this.
Support level.
Now it's become a demand zone or a resistance area becomes support. That's why it's not absolute. That's why I say support turns into resistance and vice versa. Now I can see here it broke through, even tested it. So now this is a support area. That's why I changed the color on it. Price came in, bounced out. That originally was supposed to be what? An area supply. Area resistance. It
So
blasted through it in one candle.
at what point, I think I have a lot more learning to do. I'm pretty new and this is all, quite a bit that I'm not really getting. But at what point with all these drawings and things, do you make a decision to buy something or sell something?
At
Because
one point.
uh like today, for example, I watched as the SPY and I marked up the chart with the opening ranges this morning, and then I was watching price action really is all I did all day, and I
Mm-hmm.
marked it up with lines, but I was kind of going, well, what do I do next? Like at where should I be making a move?
I guess you mean like at
Um,
what point should you enter the trade?
Yeah.
Now that comes to how you trade and what you trade. Okay.
Okay.
Obviously, SPY's an ETF. It's meant to do trade shares. Obviously, people like to do options on them. So let's take what am I on? 1 minute. Today's Wednesday. Let's take all this off and let's go
And I
back.
was looking at Walmart as well today.
Mm-hmm.
Um, And then I go back into the Discord and I can see, where people post their trades, and I go, okay, well, how did they know to make an entry where they made their entry? Because I really just watched the chart all day and didn't do anything.
Okay. I mean, actually, watching the chart is good.
Yeah.
It really is,
most of the
and
day too.
you have the
Right.
control not to take a trade.
Yeah, for
When
sure.
in doubt, sit it out.
I have no business buying anything at this point.
You're absolutely correct.
Yeah.
This goes back to one of the first Zoom calls I did, was a 5 minute opening range break. Okay,
Yeah.
so this is my 1, 2, 3, 4, 5 that I marked off.
Mm-hmm.
Okay, now this is where everything comes into context and gets pulled together. So to make things easy for everybody, I'm going to take all this other stuff off that we were talking about. Let's get rid of everything except that. Okay.
Yeah.
Now, how do you know to take a trade?
Yeah.
There's a daily chart. We're going to take everything back. Okay. You want a day trade, right?
I don't even know anymore.
Okay. Well, we're going to say it for,
There's
you're going
warm
to
in there.
trade.
Real.
Okay. We're just going to take a simple trade to get in and out, to get your feet wet, to get experience. I'm going to take everything else off my chart that I drew in, and we're going to make this easy. Everything's gone except that. What is this? My 5 day moving average. Let's even get rid of that for now. I'm going to get rid of that line. Okay. We're looking strictly at price action.
Mhm.
Daily. Which way are we going?
Up.
Up. Correct? We're in a bullish
Yeah.
trend. So until I get something that tells me that we're going to go down,
Mm-hmm.
I'm not going to. So let's get rid of that candle for now. This is on that day. That's this day. It looks like it could be going down, right? We don't know.
Mm-hmm.
That's Monday. Let's play this out. Tuesday, got another candle, right? Now, all of a sudden, we pushed up. So, in essence, what did you do?
Support and resist.
It's a pullback.
This right now, and then we did this, right? Or in the
Higher
morning,
low.
you didn't see that whole candle yet. That's what you started to do, right?
Yeah. Yeah.
Why do I say that? Because if you went to a lower time frame, obviously, to see where price, you would have noticed we gapped up today, correct?
Mm-hmm.
So, what's your bias for the day?
Moving
That
up.
it's gonna go
Bullish.
up.
Bullish. You're not going to look to, short this, are you? Higher time frame is bullish. You gapped up from yesterday's closing price. You opened up here. I'm going to look, my bias coming in opening bell is to go long. I'm not going to
Oh,
look to short this
right off the bat.
right off the bat. Higher
Oh,
time frame bias. If you go back and watch the previous zooms,
yeah, I'm gonna watch
then
it again.
yeah, that's why I say multi-time time frame analysis. I take it from there. So from there, coming in, when I see pre-market opening up, I see prices already higher, and we're going to open higher. I'm looking to go long. I'm
Mm-hmm.
not looking to go short where everyone's like, oh, it's got to fill the gap. No, it doesn't. There's no rule that says it has to. Until I'm proven otherwise, say maybe a break and retest to the downside
Mm-hmm.
of the 5 minute opening range break, then I might consider that trade. But if I don't see this happening, I'm not going short.
So you would go long right off the bat, first thing.
I'd be biased to go long.
Oh, okay.
I didn't say I'd go long. I'd be biased to go long.
Yeah.
So one of the ones that I give everyone an easy one to do is a 5 minute opening range break, right? First 5 minute candle.
Yeah, I did that this morning on the SPY. I was like,
Didn't do
well,
it
I think I should be buying something here.
correct. It didn't do it perfectly off the first 5 minutes, but that's where everything comes into context. Higher time frame, right?
Yeah.
Bullish. We gapped up. We're pushing higher. So on this one, you didn't get a clean retest, honestly.
Yeah.
But once I saw this and this come off and hold,
hmm
to me that's a go. Just
So
looking at
then,
price action.
the where you just drew now, that becomes our supply. Sorry, that becomes our demand zone for the day.
You could say that, yes. I mean, if
Okay.
you're going to do action, that's 5 minute opening range break. Those levels come in handy later in the day as well. But if you wanted to be textbook demand zone, it'd be like that.
Okay.
Yeah, that was gonna be my question. Is you have the breakout, but then what if it doesn't retest? How do you know? How do you decipher between a slight pullback and a retest?
Well, that's where other things come into play. Either reading, seeing enough charts after a while, and everything come into context. Bias for SPY, bull market. We gapped up. We closed where? 602, 603. I'm opening at 605.50 practically. That's telling me right off the bat bullish momentum. And if you recall, if I go back to extended hours, you had the report drop, right? There it is. So before the
Oh,
report, this is where we closed. Overnight, we stayed the same range. We had the data drop this morning. Here it is in pre-market. Nice candle, good volume coming in. Which way did we head up? We headed straight up
So,
into open.
as opposed to Monday.
Correct.
exactly. So can you base your trade off the overnight? They call it futures, right? Is it considered futures overnight trading?
Futures is a different instrument, but yes,
Okay.
it
So
can
just
give
say
you
is
if it
it
can give you some idea what's going to happen, but not necessarily, because the New
really?
York Stock Exchange has the most liquidity and volume.
Okay.
You could be completely nosediving in London overnight, and all of a sudden New York session rips, and vice
Okay.
versa. I've seen it both ways.
Okay. So you shouldn't base like just say if you see a low, that low would try to come back and retest throughout the day. Not
Well,
necessarily.
if you go to futures, it'd be the same thing that I'm doing here, analyzing it, seeing
Mm,
which way they're looking to take price. Same
okay.
process.
Okay.
So from here to answer, I'm sorry, I don't know the name.
Erica.
Erica. So just looking at price action, I'd say here. Now myself, I trade VWAP. That's one of my fundamental bases. So I always anchor that first candle. Opening candle for the day is always on my chart.
hmm
And I can see it's sloping up. And if I look closely here, it got above VWAP, it retested it, and started going. And I can see with the volume candles.
Right. Okay.
So to me, that's a green light to go long.
What's
Can
VWAP?
Volume weighted
Weighted
average
average
price.
price.
can you explain a little?
I'm sorry?
Can you kind of give more of an in-depth explanation of what it is as opposed to just like the name? Kind of give like what it measures
Vol-
or indicates.
it can get pretty lengthy on it, so I'm go through the whole thing. But volume weighted average price. It is an indicator created and invented by Brian Shannon. In the Discord, you see me post his books and his videos a lot, and I'll send to people. He invented it. Most times, what it does, and without getting into the mathematical calculation, it takes price and volume and averages the two together. So what it's able to tell me is based on volume and price action, which way the trend is going. If price is above VWAP, buyers are in control. If it is below VWAP, sellers are in control. This is the regular VWAP most people use. I like to use what they call the anchor. Anchor comes in handy because I can put it anywhere I like. Usually I'll put it at events like that. So actually on my chart, when that report dropped, I had it anchored there on futures. So I could see if price would come down and possibly test that level. Um, Here, I'll show you.
Oh, thank you for explaining that.
Here, I'll do that in AMD because someone asked me a question on swinging it. Let's take all this. So let's take this trend lines off for a second.
So VWAP is not the average price of the stock that it should be.
It's the daily VWAP that you see most of the time on chart is just for the day. An anchor
Uh-huh.
VWAP, like you see here, I can anchor it anywhere. So I'm going to anchor it to this high, and you can see what happens with price. Every time it comes there, drops. Try to get over, it got over, it ran up. Came back under, stayed bearish.
Huh?
This one I had from this low because I wanted to see buyers were in control up here, right? Then I saw it started losing it, came down under. So that's a whole nother session we can do on Anchor VWAP, and there's plenty of videos, and I can give you guys the books if you want on that, on how to utilize that. But that's one of them that I use. So for me, when I saw this happen with the Anchor VWAP, it meant to go long.
Let me ask something, Face. I know it is different, like they like EMAs, like okay, let's say you got a 20, a 60, and a 200.
Mm-hmm.
Once the stock start trading up under the 200 or something like that, that means it's in a bearish trend, it's going down.
It all depends. I don't trade that way. I don't use EMAs.
Okay.
I strictly watch price action at certain key liquidity levels, and I use anchored VWAP. But there are other traders that use that. Alpha uses them. Curtis uses them. I think DFresh uses them as well, where they use different EMAs on the
They
charts.
say the best thing is to learn price action of the stock, though, right? So that's not considered price action.
This, what I do is price action, yes.
Okay. I'm going to have to look up on.
There's a million ways you can make money off the market. Everyone's got their way that they understand.
I
This
just
is
want
what clicks
one.
for me.
That's what you got to do. Just come up with the strategy that work the best for you.
So speaking of EMAs, what does the numbers in front of the EMA mean? Like 9 EMA. What does 9 mean?
9 means if I had a 9 EMA here, an exponential. Yeah. There. This is what a 9 EMA. Like a 9 right there.
Yeah, what's significant about the 9 and the 20 and the 200? Like
how many candles? So this is 9. That's an EMA. All it's doing is looking back at the average. Not the average exactly. It's weighted to the last 9 candles to give you a trend.
Okay.
So right now it's starting to curve up. So it's probably looking at 1, 2, 3, 4, 5, 6, 7, 8, 9. Roughly about there. The reason it's called exponential, in this calculation, it gives more weight to the latest or most current candles.
So, hey, look, I was trying to figure that out. I came up with a concept, like when you running your it'll be 9 to 20 to 40, whatever. But the first one, I just said, is your chicken. You look at it like your account. When it's running above your chicken, it's kind of doing good. Then when it drop back down, it's gonna come back into chicken, and it might move up. But if it go below chicken, it means it's dipping into the savings. They could be your 60. But when it come down to your 200, it means you trying to really get some money, like far as taking a loan or on the brinks of bankrupt. How you
Um,
might think of it.
no, I suggest you probably need to look up some videos on EMAs and how they actually work, how they're calculated. That's not exactly the best way I think to comprehend it. In all honesty, they are trend following tools or indicators is what they are.
Okay.
Um, I trade better without them. Um,
How,
so
how I understood it, I looked up the 8-13-21 strategy, and it tells you how to identify bullish or bearish trends by one crossing the other. I don't use it anymore, and this is the
1807 August circle.
hello.
Oh, I'm sorry, it's me. I forgot I'm muted. I'm at work. Sorry,
Okay.
y'all.
So
you
for
hear
those
that again?
EMAs, there are different ones. Some use 13, 48, and 100. Some use 820 and 200. It's a matter of choice, matter of preference. Only thing is, it changes at every time frame. Keep that in mind. A 9 EMA on a 1 minute chart is not in the same place on a 15-minute chart, on a 30-minute
Yeah.
chart, on a 5. It changes.
I noticed
So
it.
everything is in context. Um, so let's get back to what was I going to show? So I showed
Can
you
I ask
guys the
one more
trend
question
line
before you
one.
move on?
Yeah.
So when you did your 5 minute opening candle, top and bottom,
Hmm.
even though it didn't retest that area since the price action was well above your VWAP, then you were comfy with it. Is that what you were saying?
Me, yeah.
Because it never came down and retested that area, but it's well above
Oh, like I said, I had
the VWAP,
multiple
right?
confluences. I showed you earlier. I went to the daily,
Right.
and I'm taking everything in context. We closed down here. We're gapping up. We had a data drop right here, 8:30,
Right, right.
and we started pushing. So if I just don't look at anything else, which way do I think the market's going to go?
Bullish.
Exactly.
Yep, for sure.
Now all
Right.
this is doing, when I ask my VWAP, and I see it start to curve up to the slope of it, that's what I'm concerned with. I'm going long.
But in general, do you think it's because obviously you said best case scenario you get a break and retest, right? But if you don't
Correct.
get that retest, then as long as it's above the VWAP, then that would be on the safer side, correct?
Yeah, because over here, that's what I got on the lower time frame.
Right.
There's my VWAP. There it is. Went over, came down, bounced right off. And if you look, he gave me a nice big bullish candle right off the top of the opening range break.
That like the boom boom candle.
Some like to call the boom boom candle. Yes, Mr. Phillies.
You watched Chris' video the other night.
Yeah.
Yeah.
I was looking at that with Tesla today. I'm like, hold up, man, that's the boom boom count. It just
Yeah.
didn't
Yeah.
come down no, under 25%. So it was on the bullish trend.
So you can see it went there. I mean, this is where you can start eyeballing it. I don't draw everything out. So after that candle, I mean, I'll draw it out so you guys can kind of see what I'm seeing. When I got in there, I don't draw it in, but I already see
Mhm.
break, retest, that level.
Mhm.
Came down again,
Mhm.
right? What is that
Yeah,
telling
I
me?
saw that
I got
this
a,
morning too, and I was like, I think I should be buying a call here.
I have a support level of some sort, right? Without even
Yeah.
getting technical, just by watching candle action. That's confirming my bias. So if I was in here, I'm still holding. Then it goes
Mhm.
here. So say I got in a trade. I'm just gonna say, you know what? I see it hit here. I got in here, right? Let's give me a save. Let's say, hey, if it gets underneath this candle, gets back down here, I want
Oh.
out. For example, I'm just making this up. This is not how I did the trade, but let's shoot for 1 to 3, roughly. 1 to 3 is a little bit higher off, but What do they tell you? All it really is, and I think in last Chris video, if it goes about less than 50% dip on his videos, supposedly, it won't go. Which holds true most of the time, not always. But that's about halfway, right? The bottom
Yeah.
of my stop loss. What's my risk to reward? 5.81.
Mm-hmm.
And if you look, so let's see, I stick to 2 and 3 hour trades, but you would have hit that easily right here.
See, now when you're talking about liquidity, that where you're drawing that out just before you widened it just now, that to me looked like a support and resistance liquidity because it almost looks like it's going sideways, but you would hold out then.
Correct.
Yeah.
Because I'm taking the trade, but this is where I don't get greedy either.
Mm-hmm.
If you notice, I calculated my risk, and I'm going to say 2 3 hour amount. I do this on futures. I guess you can do it on options too. You have multiple contracts. I'm scaling out. I might scale out at 2R, which is right there. I locked in some profit. I'm going to hit it at 3. Maybe leave my last one to go. That's a 5 right there.
Yeah. And if that's on 1 minute candles, you've got to be kind of quick then when you're doing this.
I'm
Yeah, okay.
processing this real quick as it's happening.
Yeah.
But see that level that I drew out? You're right.
Yeah.
You could say there's liquidity down here, right?
Yeah.
So let's see. Did we ever come back to that level? Nope. Maybe tomorrow we might.
Question about the VWAP.
Mm-hmm.
Can you tell me how you set that one up? Which one is the best? Is it the anchored VWAP or just the VWAP?
I use Anchor.
Yeah, I had a question about that too. Can you show us
On
So-
TradingView,
Do you set a new anchor every day?
I do. Yes, I don't. There is an indicator that sets it for you for the daily. That's the regular VWAP. I prefer to anchor mine.
No, I would take it off.
Can you show the regular one, please?
The regular one.
Yeah, when I get a little more advanced, I can probably set my
The
own.
regular one, I think, is just an indicator. I don't even have it.
Yeah, that's it.
That's the one. Only thing is, I wouldn't use all the bands, so I would take all the bands off.
Just use VWAP.
And you went into your indicators?
Yeah, it's an indicator. So that's the regular one. Let me take this off.
I'm still learning how to work the screen like y'all be doing. I have to watch YouTube tutorials on how to work.
That comes with time.
Yeah, I know. I'm
I
getting
didn't
better
start
though. I've been on it,
doing
man. I'm talking about I've been on it. I've been
Okay.
studying hard. When I wake up in the morning to when I go to sleep at night, it'd be hard for me to put my phone down. I
Sorry,
mean,
I had to take off my other
trying to
one.
learn.
There we goes. Now let's do it. I had my anchors on there, so it was overlapping. So let's take these off. So this is the regular one you guys will see most often used.
That's the regular VWAP,
That's the regular VWAP,
and that's in
and
your indicators.
that's an indicator. And you can
Here's is
see,
blue.
do you see what it does though? Even
It's
though
that
if they're
blue behind.
GAWAP, it resets itself every day to the open.
Okay.
And see what I like to do, I like to
You
use
can
anchored
change colors
VWAP.
on it too. Like you can make it your preference, like whatever color.
Yeah. So for anchors, I like to use, I can anchor to any point. So let's say that was an important candle for me. Here, there it goes. Let's make it a different color so it shows up. That was the high of the day. You see how I can follow it?
Mhm.
And then say I can, what I'll do often when day trading, I'll take the low of the day as well too. So this looks like the low of Friday. Come on. Work with me here. There. That's the low of the day. So that means buyer stepped in and brought the price up. I want to see what they're doing. Right here, they're in control. They're writing it up. So the slope of it and the price action above it tells me who's got it. That's from the high of the day, I think roughly. I just did it without even really looking. Yeah, it's pretty much there. So what happens
See,
at the end of the day here? Looking between the two anchor VWAPs that I put, price stayed in between it. Didn't make a move to the end of the day. That is why I use anchor VWAP. I can
oh,
put it anywhere I want. I will put it to data drop reports, earnings reports if it's on a stock, so I can see how price reacts. Regular VWAP just resets itself every day.
It doesn't give you the same information.
No,
So essentially,
I
you could just
see.
put that
regular
Yeah,
VWAP is only going to do it from the beginning of the day to the end of the day. My
for
anchor
that day.
stay on the chart forever until I take it off. So
and you can put
on
multiple anchors on it.
this one I put on Monday. Here's Tuesday price action. I can still see it. It's going all the way into today. It's still down here.
How does that help you in your trade, though? How do you use that to make a decision?
Um, for day trading, like I said,
Yeah.
if I anchor to the low of the day, that tells me where buyers stepped in to bring price up. They won't let it go lower than that. So the slope of it will tell me, in price being above it, that they're not going to let it drop short, lower from there. So I'm not going to
Oh,
short it.
okay.
And if I have it from the high of day, for example, and I see price coming down, like today was kind of a rangy day, so it's what was high of day right here. You can see price tested it, but never really skyrocketed off. And the
And
low of day was really the opening, really.
mhm.
I know
So
you.
if
So do
anything,
you run?
until price got above here and stayed above here, I wouldn't go long from anywhere from here.
Okay. Yeah, yeah, I see now. Wow. Okay.
Okay.
I know
If
you
I'm
mentioned.
really going to go short, I'm not going to go short unless price is below that VWAP. And the opening one happened to be the low of day as well
Yeah.
until they got under here.
Okay.
So do you run both the low of the day and high of the day like you did to show the example with the channel, or you just pick one?
No, I do both when I day trade.
Okay. And
If you're swing trading, then you'll probably do it at pivot points, earning reports, big news event, stuff like that.
for
There's a
day
whole book on
trades,
that.
you usually do both anchors. All right, cool. Do
So
you mind
then,
going over that
sorry.
the thing that you explained why you chose a 65-minute and a 195? I missed that and I heard you explain it, but I just wanted to see if you can double back.
Okay. How many exact hours are there to trade in a day?
9:30 to 4, 6.5.
6.5, right?
Yep.
So, can you split 6.5 into a 4-hour pieces?
Ah, I see what you. All right, that's what it was. Right. Yeah. Okay.
Same with an hour.
Right. Exactly. I see what you're
It
saying now.
won't. It won't come out. It won't come out even.
Right. Right.
You
Okay.
give more weight to the opening candle, really less weight to the ending, vice versa, whichever way you want to look at it. So you can break it down 65, 4 hour. That gives me perfect even candles.
That's
Gotcha.
a great
Okay.
analogy.
Yeah. Yeah.
That's actually because of Brian Shannon's book. I can send that out to you guys and post it. In the
So,
scouts, Mario has
so
done it previously.
as far as liquidity, then, like when you're looking at a chart, we should first be looking at the trend line liquidity just to get an overall picture. And then we should be looking at support and resistance after that, right?
For newer traders, honestly, I would leave the trend line alone for a minute. If you go back
Mm-hmm.
to my earlier zooms where I use the opening range break, previous day high and low,
Yeah.
previous week high and low, previous month even, those are the most highly probable trades. Those are the ones I probably trade the most and most profitable on. Before
Okay.
I go back and show you that real quick, I'll show you something here. So I showed you the trend where I saw the break and you could take that. But then I took this trade actually at the end of the day. And it goes back to here, because this is what I was seeing. Let me put the anchor back on. My opening candle. Oops. There it goes. That's my opening candle. Now, this is where everything comes into what I'd say context, right?
Yeah.
So for me, I see this level, right? That I
Yeah.
said earlier. Now, since we're talking about liquidity primarily, even though we got sidetracked with VWAP and everything, towards the end of the day, the last hour, what do I see here? In all reality, I see this range we've kind of been in for the most part right there. We've been stuck in that range, right?
Mm-hmm.
All day. Let's not worry about the color. But half the day we were just doing this. This is all we did. So what is it? I got liquidity sitting up here, right?
Oh,
And I have liquidity sitting here, right? Coming to the
yeah.
end of the day, had a good run up after a gap up. What are most people most likely to do?
Get rid of it.
Lock in profits and sell if they're up,
Yeah. Yeah.
right?
Yeah.
Number one. Number two, we have a major report in the morning, don't we?
Yes.
So, do you think a lot of people are going to swing contracts into tomorrow? No, they're going to
No.
hold. What did I tell you is VWAP, volume weighted average price.
Yeah.
This is where the most, and mind you, institutions use VWAP when they buy. Just so you know.
I know you mentioned earlier, possibly doing like a VWAP, a separate video. I think that would be a great idea because I know we have a lot of questions and don't want to get sidetracked from the original topic of this, but it would be great if you can do like a VWAP Zoom as well because it's very intriguing. I didn't really
Yeah,
understand
I'll
it
see if I
before.
can put some stuff together. Honestly, I learned it from Mario, who's one of the pros in the Discord. Um, he actually taught me all that, introduced me to it. So maybe I can talk to him and you could do one with him as
Oh,
well on it
thank you so much.
because he is the pro. But yeah, I'll talk to him and see if we can maybe put something together. But back to where I told you about where you have consolidating and
Yeah.
you see it breaking out. So you have what? Liquidity down here. You have liquidity in this area, right? Other side of the box. I knew towards the end of the day, this is kind of a little bit of a risky play, but it comes with, you know, what we like to say having seed time and chart time. I
Mhm.
kind of knew once I saw this start to happen that it was probably going to break down and go to VWAP. So my quick
Wow.
scalp
Okay.
that I took at the end of the day, I was waiting for it to break here, and basically this is all I was shooting for.
And that's like when you say quick scalp, that's like 5 minutes.
That's 1, 2, 3, 4. Yeah, that was a 5 minute trade.
Wow. Okay. That's awesome. Thank you so much. Something just clicked, so I'm so happy.
I wouldn't advise that trade, to be honest. I could have got ripped and completely the other way, but unlike a lot of
Yeah,
people in the
no.
Discord, I use a
Yeah,
stop loss. So
yeah,
I
no,
knew
I
going
wouldn't have
in
it.
that if it reversed on me here, I'd be kicked out here
Yeah.
maybe for like 20, $30 on that trade, I think.
Yeah. No, like things just all of a sudden, I understand. I understand now. I would never do that because I'm way too new to do something like that. But yeah, wow. I'm so happy right now because I actually get something.
So that was, I think we went through every example of liquidity, didn't we?
Yeah,
Did the trend
Phil, I have a
line.
question.
Yeah.
What was the fake out?
So when everybody's referring to know your levels, and is it support and resistance levels or demand and supply levels? I thought it was support and resistance.
I don't get your question. Say it again.
So you would hear coach say know your levels, and during the day you would hear people in the Discord asking what
Hmm.
is the next level. Is that the support and resistance levels they're speaking about?
Most often than not, yes.
Oh,
What they're
okay.
looking at is previous support and resistance lines
Right.
on their charts. And
I,
like I said, everyone charts, a little bit differently. But yeah, they're looking at major levels, where there is,
I
where
think,
they're looking to watch price action.
and
Chris will say, "Hey, watch,
That's
if we
what I'm
get
trying to
down
figure out.
if we get down to a certain level when he says it doesn't mean right when price gets there everybody jump. You know what I mean? Like if he
Yeah.
said, "Hey, if we get to 606, short it." I'm just saying, I'm making it up. Like say if
Yeah.
he said that, I would say, "Okay, keep an eye on it. That's what it means. See what price is doing."
Right.
I
Right?
think support and
Right.
resistance and supply and demand are used interchangeably by different people, but you correct me if I'm wrong, they're kind of the same thing. Like support would be demand and sorry, support and demand are the same, supply and resistance are the same. But I think people just use them interchangeably, if that helps answer your
They
question.
use it interchangeably, but textbook wise, no. Um, a support level will be tested and retested. That usually constitutes by textbook what support and resistance is. A supply and demand zone will just be created from a pivot point where you get this pivot point right here caused what? A break of structure. See if price going from here to here caused a break of structure, correct? So
Mhm.
textbook wise, this is a demand zone. I don't consider it a support level yet. I just know there's a bunch of buyers sitting here that had enough momentum to give me a break of structure. Now the question is this going to get tested later? Don't know yet. So for me, it's an area to watch. If I see
Okay.
price maybe come down, where's my little? Say we open tomorrow and we do one of these moves. I don't know. It wants to sell off.
Mhm.
If I see price come in here and do this, textbook definition, I would say yes. That right there, that demand zone is support. It's been tested. People use it interchangeably, but I'm telling you the textbook definition in case you guys ever go back and read up some book by a famous trader or some other pro or some of the videos by a CMT. That's you'll find that they don't use those terms exactly the same way. Even though the Discord, a lot of times people will.
Hey, can I
So
say
would
something
you say
fake?
like the support, like a support level is the actual line, and then the demand zone is just an area where you may find an area of
Yes,
support. Would
correct.
that be a better way of explaining?
Yep. You don't know an area. Just remember this: an area is not support or resistance until after the fact.
Until like a break and retest where you can find an
Right now, I
area
can't.
of
I
support with.
couldn't. If you ask me right now, hey, is that an area of support? My answer is maybe.
Mhm.
Now, say it did this today.
Now it is.
To me, yes. Now it is.
Wow. Amazing. Yeah,
Okay.
thank you for that.
So I think we went through all the examples of liquidity. You guys already know about the previous day ones and high ones, correct? I don't think we need to go through those again. But it's the same thing to mark them off if you're day trading. For swing trading, it's the same thing. If you're going to swing trade, you're going to look at the same thing. Just go to, say, a weekly chart. You want
Oh,
to
yeah.
go to a weekly chart. Let me get rid of all this stuff.
This is my first session here, Face. So if you don't mind going through the daily one, I'd like to see that just because I day trade.
Okay. I'll do it real quick, but you can check out the previous Zoom because I don't want to extend this thing out for like 2 hours now.
Sure.
Here, if you're gonna swing, here's the week, right? This is the week we're in, and if you watch my earlier Zoom calls, price action is what in candlesticks? Fractal, right? That is previous week high, previous week low. Everybody see that?
Yep.
Yeah.
Okay. That's all I did. It's very simple. Doesn't take long. This is the daily candles. What do you see them doing?
Staying in that channel.
Staying in that channel, but now you just learned about what? Liquidity levels, right?
Mm-hmm.
So that's Monday, Tuesday, Wednesday, Thursday, Friday. Last week, right?
Mm-hmm.
So that weekly candle that I marked up is actually this. Right there. I think I have mine extended right. There. That's the candle you're looking inside of that I've marked off, correct?
Yep.
And we just went through liquidity levels. What do you see it do on this day, yesterday?
It grabbed.
It swept under the low,
Liquidity, yeah.
prior week low, right? It did that and closed up here because that's what this candlestick is telling you, right? You guys have to understand how to read candlesticks. Price
Yeah.
opened here that day.
Went down.
Some point, they try to push it up here. Seller said no, brought it all the way down here, swept it. Price closed here, right? That's what this candle is telling me. It swept previous week low. So if it swept previous week low and started going back up, I'm just thinking we're going to run up the next day,
Mm-hmm.
right? Because what did I tell you? Liquidity gets grabbed and usually goes where? Opposite direction. If it swept a low, it's going to, because you're looking at a weekly or this is a daily, where is it going to look for liquidity? Opposite side. And guess where we headed today?
Oh, yeah. Okay.
We didn't quite get there, but we started heading there. You don't have to get there every day or in a day because this is a weekly. Right?
Right. Yeah. Yeah.
So now I explained that to you just by looking at this candle. So let's drop down, I don't know, 5 minute. There's that same area I marked off for you, right? Now you can see it even better here. There's your sweep.
Yeah.
Swept right below. Why? All the stops sitting down here probably, right?
Yeah.
Oh, yes, yes, yeah.
You'll see it even clearer on a 1 minute. Some people are like, oh, 1 minute gives me a headache. Well, this is why I do, because I like to read candles, and that's why I don't use Heikin-Ashi candlesticks either. People have asked me countless times. Because I like to read the candles. That tells me more information. You see
How
that?
do they know, though? How do they know there's all these stops down there?
How do they know?
Yeah.
The same way you and me are looking at it.
Oh, right. Okay. Yeah.
It's not like I have a special chart and you have a special chart, right?
Yeah.
We're all looking at the same thing.
Right. Yeah.
The difference is trading and experience and you analyzing the chart. If you didn't know about that previous week low or high, you would never probably even see that.
Yeah.
Because honestly, if there wasn't a data drop this morning, I would have swung calls for SPY. Just based off of this.
Oh, yeah. Okay. Yeah.
Because, why? It goes back to, what happened to my chart here?
It's going to go in the opposite direction of that sweep.
I'm in a bullish, higher time frame analysis. I'm bullish, right?
Yeah.
It swept the low. If I didn't have that data drop, I would have swung calls right here
Okay.
because I swept the liquidity down here. It's going to target up here. Once it gets around here, I'm out.
Mm-hmm.
So I'm showing this from a weekly and a daily standpoint, but you could do the same thing, at any time frame. You can go to an hourly and do the same. You'll see the same thing. Look, here's
Mm-hmm.
a weekly candle. This is what happened inside of it. There's a low marked. You can see it on the hourly as well. Look,
Mm-hmm.
got that nice hammer candle. This doesn't change. You gotta know how to read the candles and you'll see it. There.
Mm-hmm. Yeah.
Barely any body. Straight push up. Next one, a nice hammer candle. I mean, I can go to any time frame. That's why I say learn to read candlesticks.
Mm-hmm.
It'll save you a lot of headache. And if you notice, I'm doing this just what? Just a couple of lines, really.
Mm-hmm.
In a couple of areas. I'm not worried about anything else. I'll use a VWAP and, maybe in the middle of the day because I'm working a lot of times while I'm trying to trade. So I'll mark off areas for myself. Hey, watch for a break there. I see that level. Something like that. Because a lot of times I'm working on the other monitor and I'm always watching it. And I think someone asked, can you set alarms? Yeah. Like I drew that trend line, for example. You can set an alarm. That means in the SPY on a 5-minute time frame, price crossing it, hit me once, give me once per bar, when closes per minute, whatever.
Mm-hmm. Yeah.
You can do that. You can do it with VWAP as well, just so you know. So if I have VWAP anchored here, you can do the same thing. I can have it
Mm-hmm.
crossing above, down, less than, moving up a certain percentage. You can do this with anything. So this is why sometimes you see me in the Discord, like, yeah, I got some work to finish. I'm setting an alert, waiting for price to either hit a certain level or a certain, cross over a certain area. That's what I do.
Mm-hmm.
And if I'm not mistaken, you should be able to do it with the rectangle tool. No, you can't do it with the rectangle one. Wasn't sure, never tried it. But you can do it with the lines, the horizontal rays. You can do it. Same thing.
Mm-hmm. Well, that's amazing. Thank you so much. Wow.
So this is a lot of times, what I do, I'll mark out certain areas that I'm looking for, waiting on. Um, and just take it from there.
Thank you, Face. Have a good night. Bye.
Yes, thank
Okay,
you so
guys.
much. This was very insightful. And thank you for your patience with all of our questions. This was really good.
Mm-hmm. Yeah. Thank you. Wow.
For real. Thank you, man. It's like
No
it's
problem.
like a free school, so free college tomorrow. But I greatly appreciate it though, face. For real.
No problem.
Indeed.
All
I
right,
need
guys.
all right,
Well,
my man, you have a good
everyone have
one.
a good night.
Good night.
All
Okay.
right.
Thank you. Good
Night.
night.
Thanks.
Take care.